Hello and welcome to www.smarttrade.info. Today we're going to be discussing the differences between stocks and options. Okay, so let's get right into it. One of the first differences between a stock and an option that we want to cover is leverage, and the idea of leverage. Okay, let's say that you thought that this stock was going to go up and you wanted to participate in the upward movement of this stock. Okay, to buy that with a regular stock, you'd have to pay $42.62 per share, which means that if you wanted to participate in the equivalent level of an option, which is 100 shares of stock, you would have to pay $4,262 to get 100 shares of stock. Okay, now with an option, you can, instead of paying that much for this particular call option here, which would give you the right to buy the stock for $39, you could pay $4 even for this particular option that I've just highlighted right here, and that would give you a total of $400. So for $400 you could participate in the upward movement of the stock instead of $4,262. Now let's say that you thought that the price was going to go down. You can always just short the stock, which is basically borrow the stock, sell it right away when the price goes down, repurchase the stock and give it back to the owner, pocketing the difference. Now that entails a lot of risk. There's a lot of risk that's involved in that. Or you could simply participate in the downward movement of the stock by purchasing this particular put option, which gives you the right to sell for $43. And this particular option would cost you $1.85 per share, which would bring your total to $185. So for $185 you could participate. Otherwise, again, you would have to short the stock, which could, if it moved against you and it went up instead of down, you could lose a lot of money. This particular thing, you have some leverage. You have an ability to know this is my exact expense right here is $185. I'm not going to have to pay anything more than that. And so that tells you, it defines your risk for you. And another neat thing, if you want to look at it this way too, is let's say that you wanted to have 200 shares of stock that you wanted to participate in an upward movement. Well, you could buy 2 contracts, which would mean that you would only spend $800 instead of $400. If you had $4,000 to play with, you could buy 10 contracts, which would give you 1,000 shares of stock that you could participate in. So it gives you some leverage. Another difference between stock and options that I wanted to go over was time limited. Now you have to realize that this particular, when I pulled up this options chain, I pulled up the July 2011 options, which basically means that it will expire in July of 2011. And you can see here that date is the 16th. So then it will expire. So if the price of this particular stock does not move at all, then your option will lose value as time goes on. Okay, so that's your basic risk is if the stock doesn't do anything. If you're expecting it to go up and you purchase a call, or if you're expecting it to go down and you purchase a put, there's a time frame there. If it doesn't move up before your option expires or down before your option expires and it just stays the same, then the value of your option will go up or down correspondingly. So you just have to be aware that they do have an expiration date to them, whereas stocks, you could have them forever if you wanted to. Another difference between stocks and options is price movement. Now the price movement of an option does go up and down based upon the price of the stock, but to a smaller degree, not quite as much. Now how closely it matches depends upon the strike price of your particular option. And there's three terms that I just wanted to briefly go over. If you want more information on these terms, I recommend other videos that we have. But just for a brief example here, if the option strike price equals the stock price, then this particular option is said to be at the money. And that could be a few pennies here or there, but as long as it's relatively close, they call those at the money. Now, an out of the money for a call, if the call strike price is less than the stock's price, then it is said to be out of the money. And for a put, it's the opposite. If the put strike price is greater than the stock price, then it's said to have been out of the money. And for a call to be in the money, it would have to be, your call strike price would have to be greater than the stock price, and a put would be less than the stock price. And again, this is just very, very, very brief. If you want to, you can look at other videos that we have that explains this even more in depth. But that's just to give you a general overview, a quick snapshot of it. Again, the price movement of stock is much greater than the price movement of most of your options. And those terms are just used to describe that particular difference. And the other differences between stocks and options is the idea of financial riskiness. Now, I alluded to it earlier in this particular video that with this particular option, let's just say that you picked this particular option. You were going to pay $4.90 for the right to buy this stock for $38. Okay, your risk, the amount of money that you have at risk, maximum is $490 if you purchase this particular option. Now, to purchase the stock, you could go ahead and do that, but again, you have to realize that as a purchasing stock, you become like an owner of that stock. If it drops dramatically, then you lose a lot of money. This way, you can participate in the market and kind of reduce your risk, or at the very minimum, you at least know going into it exactly what your risk costs are. You know that if you purchase this, one contract of it is going to cost you $490. You know that you are not going to lose any more money than that on this particular if you bought one contract. And so that's kind of nice. A nice thing about options is that no matter what, all the time, you can always know exactly to the penny the maximum that you will risk when you purchase a stock option, and so that makes it nice. Well, I hope you enjoyed this very brief demonstration on the difference between stocks and options. If you'd like any more information, you can please just visit us at www.smarttrade.info. That's www.smarttrade.info. We'd love to hear from you, love to hear any responses that you might have, and if you check out that website for more information, we do have some paid stuff, but we also do have some free stuff for you as well, depending on what you want to do. And thank you for your time.